well, we're already so the exciting thing is we're seeing now both teams being able to be cross-briefed because we do a lot of classified work in both electronic systems and with what SMS does. And so now those teams getting cross-briefed, that's opening up a lot of really exciting opportunities on top-line synergies. And so we're already starting to see a lot of opportunities identified there. And so we look forward to converting those into top-line growth over the medium term. But we're also seeing procurement synergies. So again, bringing Ball Aerospace into a defense company where before they were part of a container goods company, there's real synergies that we can bring with our procurement volumes for a multinational defense company that we are. So we're already seeing some of that come into the bottom line. If you look at the outturn for SMS, they delivered 11% return on sales for the half year, which is accretive to group margins. So, and we've guided to getting them up to 12% over the medium term. So we're already making good progress on that.
I would like to go back to the numbers and look at the order intake. Overall, though, for the first 6 months, the actual number is actually about 6 billion lower than what you had seen in the first 6 months of last year. Just explain to us why. Why is this lower from an annual basis?
Yeah, well, we have a lot of big orders that come in, and so we have sort of a lumpy structure and profile for our order book. So it's not sort of a book-to-bill type of business. Some of our businesses are like that. But for instance, the Dreadnought funding can come in really big chunks. The Typhoon support that we do for KSA, for instance, that was renewed last year. That's a 5-year program. So you get that one-time big order, but then over 5 years you deliver the order. So we're really pleased to see the strong order in the first half of the year, and it actually exceeded expectations for orders. But there is that kind of lumpiness in our profile. But we've seen a really strong backlog altogether. As I mentioned, we've got 74 billion pounds now of backlog, and that really only scratches the surface because we have visibility for our incumbent positions that aren't in backlog yet, and that number is over 180 billion. So if you add that to the 74 billion, this is why we feel really confident about the medium-term visibility, that structural visibility that we have for driving growth.
I would like to look at the sector overall because several analysts are suggesting that BAE Systems and peers at this stage are trading at very expensive levels ultimately. And so there's a question mark among analysts at this stage about whether there's any upside to investing in the overall defense sector. What's your response to that?
Yeah, if you just separate defense and just look at companies that generate high single-digit growth, that generate strong operating profit, that are compounding earnings in double digits consecutively year after year, those companies have multiples higher than ours. And what we're seeing already is laying down a track record of doing just that. And based on the backlog and visibility we have for going forward, we think that we're one of those companies that can just reliably deliver that. And we've got a value compounding business model now. And that's really, I think, you have to deliver that year after year before people really see that, oh yeah, that's happening. And then you get that reflected in your multiples. But we're driving operational effectiveness, operational excellence. That's our really primary focus. And if we do that against the backlog that we have, we're confident that we'll have good top-line growth and really strong profit to go with that. And then reallocate the capital in ways that compound that model and accrete value.
I would also like to get your thoughts on geopolitical tensions at this stage. And you've been very vocal about how your company has profited from the AUKUS deals. Ultimately, though, when you think about the US election, many analysts are suggesting that if Donald Trump gets re-elected, that could provide a further boost to the European defense companies. Do you look at the US election in that timeline, in that time frame?
Well, first of all, we have to reflect that when you look at European defense, there is a real strong need to recapitalize. And if you look at post-Cold War to now, there's about a 1.8 trillion underspend if you define 2% of GDP as being the benchmark. So there's been a massive undercapitalization of European defense over the years. And so there's a reflection now that Europe needs to step up. And regardless of what happens in the White House, that's true. With Washington and politics, what we would like to do is make sure that we have a strategy that's aligned to the national defense strategy. So our portfolio alignment is really strong. And the acquisition of SMS is a good example of that, where space is an important and growing domain. That acquisition really gets us a tighter alignment to the national defense strategy. What we're doing in electronic warfare is a really strong alignment to what's needed for the U.S. defense strategy. So all we can do is make sure that our alignment in our portfolio is really tight, and that's what we've done with our strategic moves. And also we're doing that on self-funded R&D. So making sure we're investing in things that are relevant for national defense. And so I think what we see as a company is that we're, I think, uniquely aligned to the two things that are really happening in the industry. You've got the Indo-Pacific environment, which is really where the U.S. defense strategy is focused on.
Totally.
And then you have Europe. And if you look at Indo-Pacific, we talked about the U.S. portfolio, but also you can look at GCAP and AUKUS as ways in which we are really highly aligned to that Indo-Pacific environment. And then when you look at Europe, you can see our business in MBDA, our air sector, our combat vehicles. We have really tight alignment with what's happening in Europe. And so I think if you look at portfolios across the industry, I think our alignment is probably better than most when you look at those two theaters that are in play.
But what I'm trying